Dirty dealings, corporate battles, consumer woes. This is Evening 5. Imprisoned ex-Prime Minister Datuk Sri Najib Razak has apologised and expressed regret that the 1MDB scandal happened under his watch. His son, Pahang Executive Council member Datuk Muhammad Nizar Muhammad Najib, read out a statement from his father saying that it pained Najib to know that the multi-billion-dollar scandal happened while he had been head of government. Najib said that after much reflection over the course of 26 months in prison and following significant recent developments relating to 1MDB, he decided to apologise unequivocally to Malaysians. Najib, however, maintained, in line with his defence in his myriad of court cases, that he honestly believed that the funds received were from Saudi Arabia and not misappropriated from 1MDB. He added that with the benefit of hindsight, he should have acted differently when various people had raised questions about happenings at 1MDB. He said that being held legally responsible for things he did not initiate or knowingly enable is unfair to him. Najib added that he had already been punished politically and that he should not be further victimised by the courts as well. The statement comes on the heels of Prime Minister Datuk Sri Anwar Ibrahim's announcement during the tabling of Budget 2025 last week that the government would introduce a new law to allow house arrest as an alternative sentence for certain offences. Datuk Sri Saifuddin Nasution Ismail, who is Home Minister, said the new law is expected to be tabled in Parliament next year. Najib is already serving his prison sentence in the main SRC criminal case. He still has 3 pending criminal trials. On October 30th, the High Court is set to deliver its decision on whether Najib should enter his defence or be acquitted in the 1MDB Tanori case. He also has a pending case of criminal breach of trust of 6.6 billion, which is slated to start next month. Najib also has a money laundering trial involving 27 million in SRC funds. Two major shareholders of Rexit were sentenced to jail in a Singaporean court for participating in a conspiracy to illegally obtain data over 9,000 people. According to a report by the Straits Times, Datuk Xiao Kim Shen and Kong Chen Hui had pleaded guilty to one charge each of conspiring with Chinese national Sun Jiao to have the personal information of 9,369 unknown individuals supplied to them for gambling operations. The Singapore's publication reported that Sun was allegedly linked to a global syndicate that conducted malicious cyber activities. Both Xiao and Kong were each sentenced to 14 weeks jail on Thursday. Xiao is the largest shareholder of Ace Market-listed Rexit with a 23.33% stake, while Kong is a substantial shareholder via Metaco Asset Holdings' 18% stake in Rexit. Kong owns a 42.5% stake in Metaco, according to a filing with Companies Commission of Malaysia. Xiao resigned as Rexit's executive chairman on October 11th after just 6 weeks in the post, citing personal commitments and the growth of his other new business ventures. Xiao, Metaco and Bermas Holdings emerged as new substantial shareholders of Rexit with a 53.27% stake back in January this year. They offered a mandatory takeover offer for the remaining shares at 85 cents per share. They maintained the listing status of the company on the ACE market. At the offer's close in February, only 7,734 shares or 0.01% were received by the joint offerers. Nestlé Malaysia saw its third quarter earnings drop 36% year-on-year to 85.4 million, marking its second straight quarter where it saw its net profit come in below the 100 million ringgit mark. This drop was attributed to lower revenue from lower domestic sales that had been impacted by consumer hesitancy amidst cautious spending and affordability concerns. Quarterly revenue dropped 18.4% from 1.77 billion to 1.45 billion ringgit. Nestlé declared a second interim dividend of 35 cents per share, which was half of what the group paid out the year before. This brings the year-to-date dividend to 1 ringgit and 5 cents per share, compared with 1 ringgit 40 cents previously. Looking ahead, Nestlé said that while market conditions are expected to remain challenging, it sees it progressively improving in the near term, and the group anticipates a return to healthy growth by the first half of 2025. CEO Wan Aranol said that Nestlé's focus on delivering high-quality, nutritious and great-tasting halal products that offer value to consumers allows allows it to protect its market leadership and remain resilient in a very challenging external context. He adds that Nestlé has introduced new products that have resonated strongly with Malaysians, while internally it is advancing an intense program of efficiencies enabled by rapid digitalization that will help to support brand investments and protect margins. Ace market-bound Metro Healthcare said it expects a rise in demand for its fertility treatments as declining birth rates and delayed family planning contribute to higher needs for reproductive assistance. Approximately 15% of women globally, including in Malaysia, may require fertility services, said Executive Vice Chairman Dr. Tay Swee Peng alias T. Swee Peng. He was talking to reporters at the launch of the company's prospectus for a transfer of listing from the LEAP market to the ACE market. The company aims to expand its network to 7 IVF centres by 2025, with new locations in Ipoh and Kelantan. It added that it sees potential for future overseas expansion in markets like China and Indonesia, where demand for fertility services is on the rise. He notes that while the fertility rate is declining due to lifestyle choices, the rate of infertility from natural causes remains consistent. Metro Healthcare said it plans to remain competitive through technological advancements and leveraging its skilled workers, with IVF treatment costs set between 16,000 and 18,000 ringgit per cycle, a more accessible option compared to some higher-end providers where prices exceed 20,000 ringgit. The company is looking to raise 39.16 million from the exercise, with the initial public offering priced at 25 cents per share. Negotiations over the redevelopment of major transport hub Kuala Lumpur Sentral are expected to be completed this year, paving the way for the project's launch in 2025, said Transport Minister Anthony Loke. The project's developer, Malaysian Resources Corp, and the Public-Private Partnership Unit under the Prime Minister's Department are finalising terms for the privatisation of the redevelopment project, Loke said in a post-budget media briefing at the Pasar Seni LRT station on Thursday. KL Sentral is the country's largest transit hub, sprawling over 72 acres or 29.14 hectares. The cost of the redevelopment, estimated at over $1 billion, will be wholly borne by MRCB under the PPP project, and Loke has stressed that the government will not give a single cent in terms of the construction cost. In return, MRCB will get the right to develop the space above KL Sentral, as well as a mixed development on top or next to the station. Loke adds that the company will only be able to begin the mixed development after the station is completed.